Hi friends, let's start today's analysis. Today's 24 September. So before that, let's see what are the important levels of 23rd September. So 23rd September, this is the low, this is high, so this is the range PDL and PDH, and the CPR was here, white CPR. No candle came to the CPR, no candle could penetrate the CPR, that's why it remains virgin CPR. So this CPR uh, can be carry forward today also. So this is how I mark this CPR here, but no candle could come to this CPR today also. So let us start from the first candle. Today's CPR is a narrow CPR. So narrow CPR means most of the time it is trending day or zigzag day, but this is just a probability. It can also fail as it fell today. It is almost like a sideways day. It could not break that top range. Now the first candle is this is called PPT, pivot pressure trade, wherein the first candle is breaking the CPR or coming out of CPR in any direction, and this is a bullish pin bar also. So we can go long here. The stop loss will be below the CPR, and twice the stop loss is the target. But this is there is no proper risk reward, or this is a low probability, because you see within the target there are two hurdles. One is, first hurdle is PDH, and then the pivot. So that's a low probability trade for me, but one can take the trade here, and the stop loss should be below the CPR. So for me, what I will do is I'll wait for the retracement and the better risk reward. Like once the market goes up and then again comes down and tests this level, then there is a good possibility to enter on the bullish candle, not on any candle. So where it happens here. And this, like, market will not exactly come to the bottom of the first candle. Always remember that uh, perfection is has no space in market. Perfection, market will never give you the perfect setup and all. Most of the time it happens, but sometimes it's a range. Like this bottom, there are strong buyers, so in this range, anywhere the bullish candle forms, you can go long. Like this 1125 candle, you can enter here, but always the stop loss should be below the day's low, like first candle low, or below the CPR. Then twice the stop loss is your target. So if you miss the entry here, the perfect entry will be this 12 p.m. candle. This is also a bullish candle, and this is even better than this because this has a less stop loss. So always lose less, earn more. So stop loss should be less, ideally half of your profit target. So once your stop loss is suppose few points, say 15-20 points, then the target should be double 20 points, like 40 points. So here in this case the target can be days high like here, or exactly the double of your stop loss. So target is achieved on this trade. And this is again like yesterday's pattern. If you see closely, the first candle is the bullish candle. Market went up and then again came down. It did not exactly touch the bottom of the candle, but because there was a CPR also, CPR, it did not let the CPR break because CPR is a strong support. But it is a similar pattern. If you see here, the first candle of yesterday was, as I told you, first candle was doji, second candle is green, so it becomes one candle, like 10 minutes candle. If you see, this is a green candle only, so first candle can be treated as bullish candle. Then bottom of the first candle, this candle came here, and then from here again it went to days high. So similar kind of setup happened today also. The only difference is it did not touch the first candle bottom, and that's how I said perfection has no place. This full range from this, that full wicks is your buying zone. This is a zone, Like in any science is perfect, maths is perfect, like 2 plus 3 is always 5, it will never be 6. In market it doesn't happen like that. Market is mostly a probability. There will never be a certainty in market that certainly it will happen. Like previously, if you'd have traded, one setup has worked 10 out of 10 times, so 11th time there is always a possibility that it will fail. Okay, so remember this. You have to apply logic and see what market is doing and manage your risk reward. These are the simple things, but for that you should understand the types of candle and where is the strong support and resistance and where you should go long and short. So with your experience, with the patterns, with practice, this will automatically come. But trade any one instrument. If you are trading one stock, one instrument, index, anything, but only one, because it will have a typical setup, or it has its own characteristics, and over a period of time you will know how that instrument will behave. So you have to give a time not in like few days, few weeks, few months. It will take years. Have patience and gradually try to acquire trading knowledge and be consistent. So other than this, I don't see any other setup. Maybe on days high, if the market reversed, like from this candle it reversed and this became exactly a M pattern. M pattern first criteria is first candle should be green bullish candle, and then market has to come down at least 50% of the range. So it is these two criteria are met, and from this top, whenever the market reaches this top like this line, and then it is a reversal like this candle, you should go short. In this case we are not going short because immediately there is a 20 EMA, and then there is a PDH, and then below there is a CPR also. But ultimately what happened is this candle broke the top, and there yeah, as per logic we can go long here, this 215 candle, and put your stop loss below the 20 EMA, and here you see the stop loss is hit. So always remember that there are cases when your stop loss will hit. There is nobody in the world whose stop loss doesn't hit. So there are only two people or two entity. One is a liar and second is God. They only know where the stop loss should be, and always their stop loss will never be hit. So we are human and we should understand how market behaves, and on that basis we should uh, take the trade. So that's it guys. One first trade hit your target, second trade hit your stop loss. So I'll tell you, even if one trade hits your target and another trade hits stop loss, still you will be profitable because your target was double the stop loss. So even if your stop loss hits here, still you will have been positive for that day. So this is the magic of following risk reward. So that's it guys. There is no further trade, no third trade. Market was sideways and it is, I think, getting consolidated. If you see this one, this is very narrow CPR tomorrow, so market can blast any one side, the top or down, most probably top, because as I have been saying that market is in uptrend. Okay guys, thank you, bye.